Absolute pleasure to be here, ladies and gentlemen, and thank you very much for attending. Thank you also to ResourceStocks Sydney for hosting this event. And in particular, a big thank you to the ResourceStocks staff who have been running around looking after us and feeding us and making sure we're all looked after. So thank you very much for that. As Liam pointed out, RNC is a new gold company, even though we've been in the market for some time. We've had Beta Hunt operation, which we acquired off Salt Lake Mining some 5 years ago. It's probably fair to say that it's been a bit of a struggle at Beta Hunt in the early days, and it's only been in recent times that we've started to really focus on the fundamentals of the gold business. So in that sense, and if I get through the disclaimers, that we've completely transformed the company. We have a new chairman CEO in Paul Hewitt and a brand new management team across both our sites, which I'll talk about in a little bit more going on. Paul has a long history in Canada. More recently, he was chairman, CEO of Klondex, where he took that company from a penny stock to a $600 million market cap in about 6 years. So a really good performance. Him and the board, very experienced, and as I said, the management team itself now is across both sites, a lot of years in mining under their belt. As I said, we acquired Beta Hunt from Salt Lake Mining about 5 years ago. Now this is a mine that's been around for a long time. And probably sad to say, when it first kicked off, I first went into the mining industry, so it gives you a bit of a hint how old this is. And I must say, it's good to see a couple of grey beards down there at the table. We're not all young folk up here. And John Jones, I think, was one of the ones that I feel I've lowered the age a bit from John when he came up. But Beta Hunt's been around, as I said, for 40 years. They produced about 40,000 tonnes of nickel metal. It was a nickel mine in Western mining days. It then became a gold mine, and then it became back a nickel mine. And more recently, with RNC and Salt Lake Mining, it's become a gold with a nickel credit mine. So really what we have now is two high-quality resources feeding into a central mill. And that's on the back of an acquisition that we completed in June of this year, where we purchased what is the Higginsville operation from Westgold. Now we purchased that for $50 million, $25 million in cash and $25 million in shares. What that gave us really was a plant, a 1.4 million tonne per annum plant, a big resource of 1.9 million ounces to go with our Beta Hunt, and I'll talk about that in a moment, and a very, very large tenement package, all within trucking distance of Beta Hunt, within 50 kilometres. At Beta Hunt, we've made another tick off, and under, I suppose, the management and leadership of a chap that's in the room today, and his name's Steve Devlin. Steve is the Vice President of Geology. Under his leadership, he took, within 5 months, converted what was then a very small resource into close to 1 million ounces in addition to what was there. And he did that at a discovery cost of $6 an ounce. And to put it another way, if you like, every metre that was drilled down there added another 20 ounces onto the resource inventory. Now that says two things to me. One, that the technical expertise that we have at the mine and in that department is second to none. But two, is the system down there at Beta Hunt. The resources are big enough to be able to put that 1 million ounces onto the books in that sort of cost and that sort of short time. So I'll talk a little bit more about where that goes and what it does to the operation, what it does for the company a bit further on. We have a strong balance sheet. We recently raised $8.5 million in Canada, oversubscribed, and targeting key institutions over there. So we're now I haven't updated the institutions on the next page, but there are 5 or 6 new ones on, all long and all looking to support the company going forward. Our production from both sites is increasing. In the first month when we've joined the two together, in July of this year, we produced just over 8,000 ounces, and in August, just under 8,000 ounces, or vice versa. So all up close to 14,000 ounces, considering that 16,000 ounces, considering that in the first half of the year it was around 14,000 ounces produced. So we've made a big step forward in our production. We'll put out a maiden cost production guidance within the next couple of weeks. We firmly believe that if you want to invest in our stock, you need to know what we're aimed to do and what we said we're going to do, and then measure ourselves against that production guidance. It gives you the ability to be able to ring up and say you didn't make it, or well done, you did make it. And I hope it's a second call. We've undertaken a very aggressive cost reduction program across both sites. Remember, these sites, when they come together, they've got different cultures, different operating techniques. So we've grabbed these two, put them together, and now we're starting to look at how we get the cost efficiency, production efficiencies out of those two. So that work is ongoing and will continue to go. And we can see plenty of areas where we can make a difference there. Next year, and I can't say exactly when, hopefully sooner rather than later, we'll also look to list on the ASX. Currently we're on the TSX. It'll be a dual list. We'll have a very small office over in Canada. The bulk of what runs the business will be here in Australia. It's an Australian gold company. On our capital markets, our capital structure, if you like, our shares out, fully diluted base is around 600 million. We have a market cap of around 240 million, a share price 37 cents Canadian, and as I said, on cash, in addition to what you see up there, give or take a few mil here or there, there's another $18.5 million been added to our balance sheet. Our major shareholders, as you see, Westgold, who we purchased Higginsville off in June of this year, remain a significant shareholder, as does Eric Sprott and Van Eck and Associates over in Canada. Management hold about 2%. We have good coverage in Canada, but our aim is to put more coverage here in Australia in preparation for our ASX listing next year. Now, as far as the production, as far as the operation side of things, Beta Hunt really is a turnaround story. It's as I said, been there for some 40 years, mainly around nickel, but more in recent times around gold. Under the new management, we're seeing a continual ramp-up of production. As I've mentioned earlier on, we've had a very, very successful drill program, and quite frankly, I don't believe you see too many companies our size being able to boast of that sort of discovery cost or that sort of amount of ounces to go on in the time frame that we did it in. In measured and indicated category, we've added something in the order of 395% and inferred around 195%. So these are big numbers. And as I said, on the back of that, production starting to ramp up. Now, the resource upgrade did a number of things for us. Right? It started to give us the confidence, the long-term confidence, and I'm not talking 5 or so years, but out that 10 to 15 years, because both of those areas that have been drilled to deliver that resource remain open along strike and down dip. We have done a little further drilling to the north, 200 metres to the north of that resource that's been announced, and on both occasions we've intersected ore-grade mineralisation. So it tells us there's a good chance that this will extend on even further. Now, the other thing it did was, typically at Beta Hunt, we were mining quite narrow widths. what this resource has been able to do to us is show us where we were mining 3 to 5 metres, now the resource is 30 to 50 metres. Not all of it, but certainly in areas with quite long strike lengths that we're able to do two things. One, we're able to bulk mine, and that means higher productivity and lower cost. And we have a plant just down the road, 50 kilometres down the road now, that can take all of that material and then some if we want. So easily upgradable the plant, low trucking distance to that and low cost. What I haven't mentioned up until this time at Beta Hunt is the other two, what we call the cream. And one is the specimen stones. And I'm going to show you an example of a specimen stone that we intersected last week, just to make sure you know that it's real. But these specimen stones, we hit them in certain areas within the mine. We can't tell exactly when we're going to hit or how often we're going to hit them. What we can say, we are going to hit them. In this time last year, we intersected a specimen stone or stones that amounted to around 30,000 ounces, $45 million plus, in an area smaller than this stage. Now, that was last year. Since then, we've hit two other of these, around a couple of thousand ounces here and 1,000 ounces there. And these come in, the last one, which was last weekend, was close to 2,000 ounces in a very small area that we intersected in one of our development ends. What that does is immediately has an impact to the bottom line, because we do not account for that in our budgeting process nor in our resources. So when we quote resources here, it doesn't include any of that high-grade specimen. The other part of the equation is that Beta Hunt, as I said at the start, was a nickel mine and still is a nickel mine. There are certain areas down there that we'll now go to look at as far as adding on to our nickel inventory. And the good news, all our development to date is alongside both the gold and not far off is the nickel. So our development costs in this whole area is very low. So mineralisation in these areas, both along strike, still open and down dip, nickel upside, specimen stone upside. So it's not a bad position to be in. As for exploration, well, again, it's the work that Steve has done in this to add that 1 million ounces, we believe is just the start of where it can come from. You can see here, this is a cross section. Now, I promise I won't make it too complicated, but this green area down there is a basalt. The purple up there is our ultramafic. Where the two meet on that green line, and in particular in those troughs, is where the nickel is found. And these areas that go up here is where the gold is. And all of those remain open down dip and along strike. If you think Beta Hunt was a turnaround story, well, Higginsville is our transformational. This is the one where we added the 1.9 million ounces of resource, the plant, and a very large exploration licence of some nearly 2,000 square kilometres. The mill itself is in one of the premier gold districts in and around Kalgoorlie. To the north is Campbell, 50 k's. To the south is Norseman, which is about 40 k's. Campbell, 15 million ounce historic resources. Norseman, 6 million ounces. So if I just quickly, and I know I'm running over the time, a very large area here, 2,000 square kilometres, Campbell, Norseman, the Higginsville plant, it controls the region. Doesn't matter where you are in that area, if you've got a deposit, as we have, you need to look at coming in and including into that plant, including Norseman. The other, I won't forget, is our DuPont Nickel. This is our nickel project in Quebec, Canada. It is fully permitted. It has we're a 28% joint venture partner. It has a big NPV, close to $1 billion, all-in sustaining cost of $3.80 a pound, 30 to 40,000 ounces of, tons of nickel metal a year, and as I said, all but ready to go with our joint venture partner Wharton. So I said I'd finish off with a couple of things. This is what was in there last weekend. That rock, as I see there, 160 kilos, contained almost 1,500 ounces of gold. That was cut in half. The other half now is in the pot, ready to produce gold, and that one may well go as a specimen sale. So in conclusion, what you have is a company that's got 2 operating mines. They're both cash flow positive. We have a strong balance sheet. We have a large exploration area. We have nickel credits at Beta Hunt, and we have a joint venture nickel project in Quebec, Canada that has an NPV of $1 billion. For a company that's 240 million market cap, 37 cents a share, that's probably not a bad deal. Thanks very much.